Meet Pemba. He runs a small fruit stand near the jungle marketplace, and lately he's noticed something strange about his customers. More of them than ever are tapping a glowing checkout button instead of paying with bananas up front, a button that promises to split any purchase into 4 painless installments, no interest, approved in seconds. Pemba doesn't think much of it at first. A sale is a sale. But over the past year, he started hearing the same nervous joke from regulars at his stand. Just put it on the split. I'll figure it out later. What Pemba doesn't realize yet is that he's watching, one small transaction at a time, the early edge of something much bigger than fruit. Before we get into it, this video is brought to you by Banana Republic. Join today for sponsor-free, early access videos, and help keep this channel running without leaning quite so hard on ads. Thanks. And back to the story. So what exactly is buy now, pay later? Stripped down to its actual mechanics, it's a short-term loan wearing the costume of a checkout feature. You split a purchase into 4 equal payments, usually spaced 2 weeks apart, and if every single one lands on time, there's often genuinely no interest charged at all. On the surface, that sounds almost too reasonable to complain about. But buried in the fine print almost nobody reads before tapping, agree is the actual catch. Miss even one payment, and late fees start stacking, sometimes compounding with every date you slip past. Some providers will send those missed payments straight to collections, or quietly ding your credit score with little to no warning beforehand. It gets stranger the deeper you look. Because these loans are so effortless to get approved for, monkeys aren't sticking to one single app anymore. They're stacking multiple BNPL loans across several different platforms for the same shopping trip. Groceries on one app, a jacket on another, holiday gifts on a third, all within the same week. No single lender in that entire chain can see the full picture of what a monkey already owes across all the others. A recent report from the jungle's Consumer Financial Protection Bureau found a significant share of active BNPL users were juggling multiple overlapping loans simultaneously, and delinquency rates on these products have been climbing noticeably faster than traditional credit cards over the same stretch of time. You might think, sure, but at least it's clearly not as bad as credit card debt with those brutal interest rates. True enough on paper, for the interest itself. But because BNPL loans mostly sit outside traditional credit reporting systems entirely, they're much harder for monkeys, banks, and regulators alike to actually track in real time. Multiple loans spread across multiple apps can pile up almost invisibly in the background, feeling completely manageable in the moment, because each individual payment looks small on its own. It's only when every app gets added together that the real total finally comes into focus, usually well after the fact, and usually right around the time a monkey is standing at a fruit stand deciding whether they can afford dinner. Here's the punchline underneath all of it. Retailers love this button, because monkeys reliably spend more per checkout when the sticker shock gets broken into smaller pieces. Multiple independent studies have found shoppers using BNPL options tend to spend noticeably more per transaction than those paying the full amount up front. This isn't some convenient afterthought bolted onto checkout. It's specifically designed, tested, and optimized to lower your guard at exactly the moment you'd normally hesitate and reconsider the purchase entirely. It keeps getting stranger. Some BNPL providers have started partnering directly with grocery delivery apps and food ordering platforms, letting monkeys split the cost of dinner into 4 payments. Splitting a meal you've already eaten and digested into bi-weekly installments should probably raise more than one eyebrow. But the checkout button doesn't pause to ask whether that's a reasonable idea. It just offers the same friendly 4-payment split. It offers for a couch, a jacket, or a pair of shoes. So who actually wins from this button at the end of the day? Retailers get noticeably bigger shopping baskets at checkout, including at small operations like Pemba's stand, once he eventually plugs into one of these platforms himself to keep up with competitors down the row. The BNPL companies collect late fees and take a cut directly from merchants on every transaction processed through their system, win or lose. The only ones who clearly don't come out ahead are the monkeys quietly stacking 4 payment plans across 5 different apps. watching small chunks of bananas leave their account every other week for purchases that genuinely felt free the moment they tapped the button at checkout. Sponsor break. Speaking of small amounts adding up without anyone noticing, this video is generously supported by Banana Republic. Join today for ad-free early access and help this channel keep running. Thanks. And back to Pemba. The bottom line is this: buy now, pay later didn't invent debt. Monkeys have always borrowed against tomorrow's bananas in one form or another. What it did was make that debt feel almost invisible, splitting it into pieces small enough that nobody stops to add up the whole picture until the bananas are already long gone from the account. Regulators are finally starting to pay closer attention. Proposals to bring BNPL products under the same consumer protections already applied to credit cards are actively being discussed in policy circles right now. But until any of that becomes actual law, every single tap of that button remains a quiet promise made against bananas nobody's technically earned yet. There's a psychological trick worth naming directly, borrowed straight from behavioral research. Monkeys are famously bad at weighing a big, distant cost against a small, immediate one. It's why 4 payments of 25 bananas feels dramatically less painful than 1 payment of 100 bananas, even though the exact same total leaves the account either way. This button exploits a well-documented quirk in how brains process cost, splitting the pain of paying into pieces small enough that each individual tap barely registers as a real financial decision at all. That's not an accidental side effect. It's the entire reason the product performs so well for retailers. And unlike a traditional loan, where a bank sits down and checks whether a monkey can realistically afford the payments before approving anything, BNPL approval decisions typically happen in seconds, based on thin data, with no real picture of what else that monkey already owes across other apps. That speed gets marketed as a feature, kiddo freezed instantly, but it's also precisely what allows the loan stacking problem to happen in the first place. A traditional lender checking a full credit history would likely notice 5 open BNPL loans and hesitate. A checkout button optimized purely for approval speed has no incentive to look closely, because slowing down to check would mean losing a sale at the exact moment a monkey is ready to buy. There's also a generational angle worth mentioning, because BNPL usage skews heavily toward younger monkeys who came of age without ever holding a traditional credit card, and who often see this button as a safer, more modern alternative to old-fashioned debt. In some surveys, a meaningful share of young adult users report having little to no idea how BNPL late fees actually work, or whether missed payments could eventually land on a credit report at all. That knowledge gap is a direct consequence of how new and lightly regulated this entire category still is. Compared to credit cards, which have had decades of consumer protection law layered on top of them, one hard lesson at a time. Now think back to Pemba's fruit stand, because it's actually a decent snapshot of where this trend is quietly heading next. BNPL started with big-ticket items, electronics, plane tickets. But the same infrastructure now works just as easily on a bag of fruit or a plate of dinner, because the underlying technology doesn't distinguish between a couch and a sandwich. It just splits whatever number gets entered into 4 smaller numbers and lets you tap approve. Once that split becomes available on literally everything, the effort required to notice you're borrowing at all starts approaching zero. Scale that across an entire generation of shoppers, and the aggregate risk sitting quietly in the system looks very different from any single missed payment. It's not that any one BNPL loan is dangerous on its own. It's that the entire category was built to feel individually painless while collectively adding up to something regulators are only now starting to measure properly, which means the real size of the problem probably won't be fully visible until it's already showing up in delinquency numbers nobody can explain away. So next time you see 4 easy payments, glowing invitingly at checkout, whether it's for a couch or a bag of fruit, you'll know exactly what's really being offered underneath the friendly design. If any monkeys are confused, just remember, this is a simple explainer of buy now, pay later. And this video is satire about fictional monkeys in a make-believe jungle. Please do not sue monkey, and thank you for watching.